This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
Okay, number 6. Always look at the requirement first again. If the strike goes ahead, which product or products should be produced if profits are to be maximised? Now if we go back and look at the information, we've got the following production plan for the next 4 weeks. Figures reflect the full capacity level of operations, and the planned output is equal to the maximum demand. Ooh. So we've got 4 products there. Product A, for example, we know the selling price, we know materials, labour, variable, fixed costs. Don't waste time checking the arithmetic, but product A, there's a profit of $30 a unit. We'd planned to produce 300, and the labour hours per unit 6 hours. And similarly B, C and D. So there's what we're planning to produce, there's the profit per unit for each of them. The problem should be already becoming obvious to you which sort of problem it is, but the direct labour force is threatening to go on strike for 2 weeks out of the coming 4. It means that only 2 160 hours will be available, rather than the usual 4 320. And so, the name doesn't matter, but it's actually a key factor analysis. The problem is that we've only got limited hours available. We plan to make 300 of A and take 6 hours, that's 1800. We planned to make 125 of B and take 8 hours, that's another 1000 hours. We planned in addition to make 240 of C and take 3 hours each, another 720. We planned to make 400 Ds, 2 hours each, 800. And so we were expecting to have available 2, 8, 3, 5, 20, 4, 3, 20 hours. Don't do this in the exam, I'm using it to make sure you're clear what's happening. But that's what we planned to have available. It turns out we haven't got enough hours, we can't make that number of all the units. So we've got to decide, what are we going to make? You know, will we not bother making A? Will we not bother making B, and so on? And here, as I said, it is very standard key factor analysis. For each of the products, we look first of all at the contribution per unit, because total fixed overheads aren't going to change whatever happens. It's the contribution which will go up and down as we produce more or less units. And for A, the profit's 30, that's after fixed overheads of 16. So it's a contribution of 46 a unit. For B, a profit of 42 after overheads of 10. So the contribution is 52 a unit. For C, profit 13, fixed overheads 8. Contribution 21 a unit. And finally for D, 48 plus 12, 60. I said in one of the earlier questions, in fact the previous question I think it was, if you prefer, look at sales less variable costs. It's quicker to take profit, add on the fixed. That's how much per unit, but our limited resource, our problem, is the hours available. And to make each A, take 6 hours, to make each B 8, C 3 hours a unit, D 2. And given we've limited hours, we want to use them wherever we can make the highest contribution per hour. So the contribution per hour for each product. A takes 6 hours to generate 46, so per hour 767. B, 8 hours to generate 52, which is $6.50 an hour. C, 3 hours to generate 21, which is 7. And finally D, 2 hours to generate 60, which is 30. But again, we want to use the resources in whichever gives us the best return, best contribution per hour. So in fact, D is the best. We want to make as many Ds as we can. A is second best. C is third best. B is fourth best. If the strike goes ahead, which product or products should be produced if profits to be maximised? Well, we should certainly make D. The trouble is there's still a choice of 3 answers. So we're going to make D and A, or D and B, or D on its own. So I'll have to start going through it a little bit. We will make D, but of course there is a limit to how many Ds we can make. The question said, the figures represent the full capacity level. Planned output is equal to maximum demand. So D, we were intending to produce 400. That must be the maximum demand. So whatever happens, we can't make more than 400. And if we make 400 Ds, each D takes 2 hours. And so that will take 800 of the hours. We had 160 hours available. So we've still got 1360 hours left. We can't make more Ds, so go to the next best one, which is A. And, well, I now know the answer, surely, given those choices. The answer has to be A. It's D and then A. However, just to double check myself, but don't waste time in the exam, how many A's can we make? Well, a maximum of 300, but since each A takes 6 hours, well, we've only 1360 hours left. And so, in fact, we'd use all the remaining hours making A. We'd make 226.7 or something, whatever. But like I say, I am wasting time there. Given the choices available, it's D first. From what I've done, without doing that, it must be A second. So, there's number 6, the answer's A. What about number 7? This should be an easy one. Make sure you don't do anything silly. Applying the high-low method to the above information, which of the following could be used to forecast total costs from the number of clients expected to attend, where X is the expected number of clients? And looking back at the information, the following table shows the number of clients who attended a particular accounting practice over the last 4 weeks and the total costs incurred. And you've got there for 4 weeks how many clients, how much the cost was. 400 clients, it was 36,880 and so on. Now we're asked an equation of that form where the total cost is going to be a fixed cost. I don't know the answer yet, but if the answer was A, 7 to 80 would be the fixed cost, plus a variable cost per client. Again, if the answer does turn out to be A, there's a variable cost of 74 per client. Anyway, standard high-low, and so it's the number of clients, total cost. The high one, you're always choosing the highest and lowest level of activity. So the high one is the highest number of clients, which of those 4 is 460, and the associated cost is 40,000. The low one, well, again, in terms of level of activity, the number of clients is what we're looking at. The lowest is 400 in the first week. The cost is 36,880. The difference between them, well, for an extra 60 clients, The total cost was higher by £3,120. And of course, and this really should be automatic by the time of the exam. But the only reason the cost will be higher is because of any extra variable cost. Any fixed cost will stay unchanged. And so it does mean the variable cost per client there's an extra £3,120 for an extra 60 clients, which is £52. Look at the choice of answers. The variable cost, I said before, is whatever multiplies x. You know, A, there's a fixed cost plus 74 times x. 74 will be the variable cost. In the case of B, 52 will be the variable cost, and so on. Well, although I will actually finish it, you should be learning from these. In the exam, to do any more really would be wasting time. They're given the variable cost per client is 52. The answer can only be B. It can't be A, C, or D. It can't. Too many people would waste time. You see, it may only take a minute or two to calculate the fixed cost, but it's a minute or two wasted. You could be using that time doing some more of the later questions. However, just for everybody's benefit, to get the fixed cost, look at either of the two, high or low. If I look at the high one, we now know what the total variable cost is, because there were 460 clients. The variable cost is 52 per client, so the total variable 23,920. Well, that's the variable cost. In addition, of course, there is a fixed cost. And what we know is the total cost. And the total cost for the high one, 460, is 40,000. And so the fixed cost must be the difference. If the total's 40, and if the variable is 23,920 in total, the fixed cost must be 16,080. Which is what we had for B. But do appreciate what I said. However quick you may be able to do that last bit, here it's not needed. I'm surprised. You see, if the examiner, if A, for instance, had been 7 to 80 plus 52x, then getting the 52, well, it could have been A or B, then you would have to have calculated the fixed. But here, there'd be no point. Move on to number 8. If Division B accepts Coldco's offer, what will be the impact on profits per year for the group as a whole? Well, let's look and see what they're talking about. Oxco has two divisions, A and B. Division A makes components for air conditioning units, which it can only sell to Division B. So Division A is making things, they're selling them to Division B. The marginal cost per unit is $100, so it's costing A $100 to make each unit. The transfer price, well, they're selling them to B at $165, fine. Total production and sales, $2,200 a year. And A's got fixed costs of $10,000. Coldco has offered to sell the components to Division B for 140 a unit. If Division B accepts this offer, Division A will shut. And the question again, if Division B does accept Cold's offer, what will be the impact on profits per year for the group as a whole? Well, as far as the group as a whole is concerned, there'll be two effects. First of all, as far as the group is concerned, if Division A makes the units, it's costing a marginal variable cost, it's costing $100 a unit. For the group as a whole, if instead we let Division B buy from Cold, it'll be 140 a unit. So there will be an extra cost to the group. Every unit will cost the group 140. At the moment it only costs us 100 for A to make. So it'd be $40 extra on every unit, and over the year 2,200 units. So over the year 40, 2,200. It'll cost the group 88,000. However, if we do close Division A, there will be a saving. We'll save fixed costs. So saved fixed costs. For the group as a whole, close B, we will save 10,000 a year. Now, the transfer price here is completely irrelevant as far as the group as a whole is concerned. Units currently cost 100, in the future will cost 140. So on the one hand, we'll lose 88, but on the other hand, we'll save 10,000. And so there's a net extra cost involved if we close of 78,000. And of course, if there's an extra cost of 78, that will reduce profits. The answer, therefore, is B. And number 9. Which of the above statements are true? So another of these, that it's quick, you either know the answer and tick it, or you know that you don't know the answer and you make a guess. The following statements have been made in relation to activity-based costing. I'm not going to give a lecture on activity-based. There's a lecture on the website. This just is factual. Number 1, a cost driver is a factor which causes a change in the cost of an activity. Yes, it's the cost driver that determines how much it's costing us. 2, traditional absorption costing tends to underestimate costs for high volume products. No. Traditional absorption, it tends to overestimate overhead costs rather than underestimate. And so the answer, straight off, is A. Number 10, and then we're halfway there. A linear programming, reading requirement. If an extra 20 kilos of material Z becomes available at $2 per kilo, what will be the maximum increase in contribution? What will the maximum increase in contribution be? Read the detail. A linear programming model has been formulated for 2 products. The objective function, C equals 5x plus 6y. Each unit of x uses 2 kilos of material Z. Each unit of y uses 3 kilos of material Z. The standard cost of material Z is $2. The shadow price for material Z has been worked out. The shadow price is $2.80. Well, in fact, we can write this straight down almost. But although I can't here give a lecture on linear programming, you should know what shadow costs are. And I'm going to say slightly more than is actually needed here. The shadow price, you can express it in two ways. It's the most extra we'd be prepared to pay for one extra unit of a limited resource over and above its normal price. You know, here the limited resource is material Z. Its normal price, the standard cost, is $2 a kilo. There's a limited amount available. If we could get more, but we have to pay a higher price, the shadow cost is the most extra you'd pay. However, that's not really relevant for this question because the way we calculate shadow prices, the calculation, it's the extra contribution that can be made if we have one extra unit of the limited resource. That's how it's calculated, and that gives us the answer here straight off. An extra 20 kilos of material becomes available at $2 per kilo. What's the maximum increase in contribution? Well, the shadow price is $2.80. That is the extra contribution we'll make if we get one extra unit. We get 20 extra kilos at $2.80. It'll be an extra 56. The answer is B. That would be assuming that product Z that we were able to buy at its normal price of $2, which is what the question says. It becomes available at $2. In fact, quite likely we'd have to pay more than $2. Well, fine, we'd be prepared to pay up to $2.80 extra. We'd be prepared to pay up to $4.80. But every extra cent that we were paying would mean a cent less profit. Anyway, there we are. There's number 10.